The financial environment in Saudi Arabia is rapidly changing and is embracing global investment opportunities such as Forex trading. With this economic expansion, potential traders need to understand the legality of Forex trading in Saudi Arabia. While the country does not impose strict Forex trading restrictions in Saudi Arabia, investors walk through an environment where there are no specific local licensing requirements for Forex brokers. However, the absence of direct regulation by the national financial authorities, including the Capital Market Authority and the Central Bank of Saudi Arabia, does not mean that the market is unregulated. As interest in Forex trading grows among Saudi investors, the need to take a closer look at the rules governing the sector and ensure that Saudi Arabian Forex trading rules are in line with international regulatory norms is highlighted. Is Forex trading legal in Saudi Arabia? Trading Forex and other financial instruments in Saudi Arabia is legal but strictly regulated. The two main regulatory bodies in this area are the Capital Market Authority, CMA, and the Central Bank of Saudi Arabia. The CMA is responsible for supervising the securities market and investment services, licensing and monitoring the activities of brokers and investment firms, protecting the rights and interests of investors, and ensuring transparency and information security in the market. The Central Bank of Saudi Arabia also plays a key role in regulating Forex trading by issuing licenses to brokers and setting standards for their activities. Brokers wishing to operate in the country must obtain licenses from both regulators to ensure compliance and protect the interests of traders. Rules and regulations for Forex trading in Saudi Arabia. Licenses in Saudi Arabia. Brokers in Saudi Arabia are supervised by the Capital Market Authority, CMA. The main requirements for obtaining a license are as follows. The company must be a joint stock company registered in Saudi Arabia. The minimum registered capital is 50 million Saudi riyals. Only Saudi Arabian citizens can be shareholders in the company. At least 50% of the board of directors must be Saudi Arabian citizens. Investor protection in Saudi Arabia. Investors in Saudi Arabia are protected by the CMA. There is also an Investor Protection Program, IPP, that acts as a compensation fund. The IPP compensates for losses incurred due to the broker's insolvency or illegal activities. Taxation in Saudi Arabia. In Saudi Arabia, income from Forex trading is taxed at 20% for residents and 15% for non-residents. How to start trading Forex in Saudi Arabia. You have decided to start trading Forex in Saudi Arabia. What are the next steps? First, make sure you know everything about Forex trading. Do your own research and make sure you fully understand what you are doing. Make sure you are fully compliant with Saudi law, and then follow these steps to get started. Choose a trustworthy broker. Choose a reputable Forex broker that is regulated by an authorized body like the CMA or an international regulatory body like the FCA or SEC. Make sure the broker offers services in Saudi Arabia and supports a comfortable trading platform. Once you have chosen a broker, open a trading account with that broker. Set up the platform. Deposit a comfortable amount of money into your trading account, then download and install the trading platform offered by the broker or another platform that is compatible with your trading account. Get familiar with the features and functions of the platform. MetaTrader 5, MT5, is one of the most popular trading platforms and is legal in Saudi Arabia. Trade, control, develop a trading plan and practice on a demo account. Once you are confident in your skills and strategies, you can start trading Forex pairs. Remember to start with small position sizes and increase them as you gain experience. Monitor the markets constantly and analyze price movements, economic indicators, and geopolitical events that may affect your trading. FAQs. Can I trade Forex in Saudi Arabia? Yes, you can. Forex is completely legal in Saudi Arabia. However, the legal and regulatory considerations in the kingdom are quite complex. The Capital Markets Authority, CMA, strictly regulates Forex trading, and Saudi nationals cannot use brokers that are not licensed by the CMA. This is because it violates currency trading and capital market regulations. Investors must also be licensed by the CMA to trade Forex. How to trade Forex in Saudi Arabia. To trade Forex in Saudi Arabia and comply with local regulations, you must deal with a broker licensed by the CMA in that country. Investors or institutions seeking to invest must obtain a Forex trading license from the CMA. Only investors with a net worth, excluding residential property, of at least SAR 5 million or $1.333 million are eligible investors. Foreign investors who reside within the kingdom must also comply with CMA regulations. To trade Forex in Saudi Arabia, you must meet these criteria and be approved by the CMA. Do Forex traders pay taxes in Saudi Arabia? Forex traders in Saudi Arabia do not have to pay taxes. However, if you are required to report your profits to local financial authorities, you are advised to consult a tax advisor to ensure that you are complying with local laws. Conclusion: Forex trading is legal in Saudi Arabia but is subject to strict regulations imposed by the Saudi Capital Markets Authority, CMA, and the Saudi Arabian Monetary Authority, SAMA. Traders using Saudi brokers are subject to CMA regulation. If using an international broker, ensure that they are licensed to operate in Saudi Arabia. Real Muslim Forex traders should consider whether their transactions are halal according to Islamic law and may choose an Islamic account if required. Research the laws and regulations of the region before starting to trade.